Hi, you're watching Investor Insights, and in this video I want to ask you a simple question. What happens when you're right and the market is wrong? Can there be such a situation? Well, most professional investor or professional trader believes that their thesis is correct. It's part of our nature to have this trading ego that we can't be wrong. But sometimes you are right and the market is wrong. And during those times, you got to stick by your thesis. If you think that the fundamentals for an economy, a sector, a specific stock is not justifying its price earnings, why on earth would you be piling into it? But at the same time, if you're right and the market's wrong, and you happen to short this stock and it keeps on going up, you're going to get crushed. And everybody's done it. Not too many people will admit to it. Everybody makes mistakes. The market is never wrong. The market can be manipulated by central bankers or governments or a whole big bunch of stupid lemmings. But eventually, fundamentals will always catch up. This is a very important point. You may think that you're right and that the market is wrong. But when the market is distorted and you can't see that, then what can you do? The best approach to trading or investing when you know you're right but the market is wrong is to stay away. If you have to do something, put your money in cash. Yes, inflation's going to eat away at it, but you're not going to take a beating either way. Either going short and the thing goes up, or going long and the thing crashes on you. Markets are never wrong. I can't say that enough. It just takes time for reality to catch up with it, especially during times of market distortions by central bankers and the like. You may think that you're right and the market is wrong, but you're not. You're right and the market will be right in due time. Don't despair. Do something else. You're going to be pulling hairs all day and all night long, seeing the market go the other way to your direction, simply because, well, it's being distorted. Very important is to have a sound thesis to begin with. If you don't have that through good research and good education, you're never going to know that the market's wrong for the time being. But if you know that you're right, and you're definitely right, because all the signs are pointing towards what you think is going to happen, but it doesn't happen, not for a while yet, then don't trade against your thesis. Stick with what you know, stick with what you understand, and if it just doesn't work, just stay away until things start to move your way. And if your thesis is correct, then it should ultimately be right. I look at one of my best trades in the last 3 years has been shorting the Aussie dollar. And I've been shorting it unsuccessfully for 2.5 of those years. And a few times I got crushed. In September last year, in 2012, the RBA cut rates. I was trying to short the Aussie dollar. Man, a lot of box of tissues got wasted on that one, because the Aussie dollar against the US dollar actually went up. Go figure. But in April this year, the Aussie dollar started tumbling. It's still tumbling, and it just hit another fresh 3-year low just on Friday night. So my thesis that the Aussie dollar was way overvalued was correct. It's just that the timing was not so good in the past 3 years. But since April, it's been the best trade in many, many years. So the market can be wrong through external forces, and ideally I should have stayed away. But I'm a sucker for punishment, and I'm a high frequency trader, so I love to get in and out anyway. But that's a story for another day. So if you know you're right, and the market's mispriced, or the market's distorted, and the market's wrong, just stay away. And when things start to move in the direction that you think it's going to move, then you act on it, because the momentum is now going your way. Take that into consideration.